Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for WealthPress. Today is Friday. It is July 23rd. I got a question for you. Where in the world is the summer going, right? It's almost done. I don't even know where it hasn't even started yet. Let's talk about the global economy. It's Friday. We don't have a lot of data today on the table. The markets are going to be kind of choppy if I'm correct. Let's see how we're going to be opening up overnight. We're up quite a bit. Let's see how the futures are doing. Usually I start with the futures, but today I got off track. They're actually up pretty good. They're up beyond random. So there's a really good upside momentum right now moving into the market, which is very, very good, very, very positive, very, very bullish. And it looks like this pullback is actually moving back into all highs. So volatility is moving the right way. And I think that's because the fear over the COVID pandemic is declining just slightly, and earnings are coming out better than expected. But let's talk about global economy, and then I'll talk about the nitty-gritty, okay? So investors are nervous about the risk that more contagious Delta variant, which is spreading rapidly, might disrupt the recovery from last year's pandemic. Thailand reported record of 14,500 cases, 114 deaths, and a strict set of limits. Now, the central bank, meanwhile, has said worst outbreak could cause the economy to contract by as much as 2% this year instead of the recovery. Now, if that's the case, that's going to have a big impact on bond prices and stock prices, and it's going to have a big impact on the type of stocks that go up. Regulators were planning more penalties for ride-sharing giant Didi, whose shares in New York sank 11.3%. That's based on what's going on with China right now. Hints about whether the Federal Reserve may begin to unwind some of the support that's helped keep the economy going during the pandemic, now that the inflation is on the rise, is expected for a two-day policy meeting next week. That's going to be very, very big, because remember what they said in the beginning. Jerome Powell, Mr. I have a crystal ball. We're not going to take any action for till the end of 2023. Oh, wait, we may take action as early as this summer. So yeah, we definitely want to see what's going on. And lastly, Labor Department, the report came out, the jobless claim, 419,000. As I said, it had a little blip yesterday morning. This is not a really big of a deal because the numbers were so darn good for so long. The 4-week moving average is like 398,000, something like that. The truth is, we were like around 800,000, 700,000. Then once we broke, and we've been near the 400,000, 380, 420 for a while. So this, unless this continuously increases, this is just a blip based on a number that's been really, really solid. So I wouldn't really put much faith into this, and the market didn't either. 10-year Treasury note yield, 1.28. Not too bad, right? Let's take a look quickly at the bond market, which I think is going to be coming down. And the bond market is down again. I told you guys 3 days ago. Let me just show you this. When we went here, I said, guys, this is a gift. Short the heck out of this market. And a lot of my traders did. And I think bonds are overdone. I don't think we're going to see bond prices this high in a while. It happens a lot. They break through the 200-day moving average. They huff, they puff, and then they start moving back. And again, if you look at the long-term trend, it's down. It's not up. We kind of got out of that trend a little bit, but I think we're going to revert back down because economy is going to get better, and rates, we're not going to get as much support out of the market as we've been seeing. It's just that simple. But we do have some vulnerability right now. For example, let me show you the SPY. And I know it's going to open up higher and it's looking great, but remember the equal weighted SPY. The equal weighted SPY tells us the RSP, isn't it? Right. Equal weighted SPY is different. This is the SPY where everybody gets equal market cap. It's still flat. So be very, very, very careful. Some stocks, a handful of stocks are moving up, but most stocks are not. That's what this is telling us. Also, look at the MDY, the mid cap. You'll see it looks almost identical, even worse. So the broad market, broad market isn't really doing all that great. The top stocks are. As a matter of fact, let me show you the 11 sectors. So financial, it's not looking that great. I'd like to see a breakout above 37. Energy's not looking that great, but I'm still rather bullish on energy long term. Utilities are looking okay. Consumer staples are looking really good, and I'm really focused on consumer staples because that's a very interest rate sensitive sector, and that's one we're going to talk about in a few minutes because I got 3 hot stocks for you. Oh yeah, it's like that. Then we got the healthcare sector, which is looking really great. That's always going to go up when there's fear of more COVID pandemic. The reason industrial and basic material, which is right here, are in the crapper is because there's more fear about COVID pandemic, which causes the tech, the stay-at-home stocks, the consumer staples, those type of stocks to rally. And that's going to take precedent for a while. But at the same time, you still have a good upside on consumer discretionary, on the communication sector, and real estate is looking really, really good. As far as the overall, where is technology? Technology is looking good, but I think it's getting a little overbought, especially the larger cap stocks. My advice, my suggestion, in my experience, and I've been doing this for, it's going to be 28 years in January, if you can believe that. I can't believe it. 28 years in January that I've been doing this. I like the consumer staples. Why? It offers us defense. It keeps us away from volatility. And if the market goes down or reverts back down, consumer staples and utilities typically move higher, not lower. So I like them right now. And financials, they're not really responding to earnings as well as I thought we would. But I'm not giving up the ghost yet on the materials and the industrial. I've been very, very bullish on them. But right now, we want to get a little more COVID focused. We want to focus on what happened during March, April, May of last year a little bit, because we're having a flare up, and that's going to cause the stay-at-home tech stocks, the internet stocks, the cybersecurity stocks, the Pelotons, the Zooms to rally, and the boring stocks that have been rising to cool off. That's what you are seeing right now. But I like consumer staples. I like this pullback. For example, this is the VDC consumer staple ETF. Let's take a look at it. I wanted to look at something different than the SPY. And as you can see here, it's below the 50-day line. If you look at the SPY, XL, let's look at consumer staples here. Looking just slightly better, but I think this sector is going to run. It had a nice little bearish move, didn't move too little. I think we're going to have a nice move, or at least these stocks will stay stable. So I've got 3 boring large cap stocks for you that are doing really well right now. Coca-Cola. No, I'm not going to tell you what Coca-Cola does. If you don't know what Coca-Cola does by now, you've got bigger problems. So Coke is a big one. I really, really like Coke right now. You may want to wait for a pullback. And I told you last week about Pepsi. You guys remember it was about a week ago while I was still in Lake 𝗧𝗴𝗃. And Pepsi hasn't done that bad. So Coke and Pepsi, I like those 2 right now. I like 𝗧𝗴𝗀 Lauder. And I like how it's congesting near all-time highs. It's not really overextended like this. But even so, it's not showing a lot of increase in volatility. And if you look at what 𝗧𝗴𝗀 Lauder does, cosmetic, toiletries, skincare, Tommy Hilfiger, Bobby Brown, Donna Karan, people are going to be using 𝗧𝗴𝗀 Lauder no matter what happens to the economy. 1-year return, 66%. Not bad for a boring consumer staple stocks. And lastly, Costco. What do people do? They go to Costco when there's a pandemic fear. They start stocking up on steaks, toilet paper, whatever they can. So I like Costco right now. And yeah, it is a little overextended. It may pull back, but it's not extending in volatility. That's the biggest factor that people don't realize. I don't just look at a trend. I look at the quality of the trend, and I want to see wide, narrow range. You see this volatility? How it goes higher and then it goes lower? It's consistent here. So when volatility is consistent and price is moving higher, there's a good chance it'll continue moving higher. Now, if there's anything you learn from this exercise, take that. That's very, very important. Increase in volatility and continued trend are not each other's friends. All right, consumer staples, be careful out there. We've got a lot of reports next week. This week, we've just got more earnings and more earnings next week. Next week's going to be a really big week for earnings. Now, folks, I know it's Friday. I know you're all waiting to get out of here, but I've got something important for you. Wouldn't it be nice? Wouldn't it be nice to have a strategy right now that works regardless of interest rates moving lower, COVID spiking, earnings, inflation pressure? It would be great, right? Not only does it exist, but it's performed super well too. For a limited time, you can learn the strategy the 10-time heavyweight trading champion Chuck Hughes used to profit from 97% of his positions that he took over the last 2 years. I don't have a 97% success rate, but Chuck does. And it's documented. You could look at his account statements. I'm serious. You could look at his account statements. Matter of fact, I'm going to show them to you. And by using this incredibly powerful Trophy Trades alert system, he hasn't had a single down year in 20 years. 20 years. Chuck sees how the market downturns can crush a trader's portfolio. He knows about it. He's been around the block several times. But he also sees how Trophy Trade alerts can give investors a shot at thriving, giving you an unfair advantage during good periods and bad periods and choppy periods, like we're seeing right now in a lot of stocks. Folks, there's only one thing left to do. Click on the link below to learn about Chuck's strategy and how you can use it to navigate in any type of market environment. Most importantly, make sure to like this video, subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when I post a next video like this, giving you 3 hot stocks. And have a great weekend. And send me some feedback. I love hearing feedback. Support@marketgeeks.com. It'll get to me. Bye. Have a great weekend. Bye, guys.